Good day, ladies and gentlemen. Thank you for joining me today. My name is Arun Vinod, and I'm thrilled to have this opportunity to share my trading experience with all of you. So, we have planned to have a playlist of trading videos. So, we are planning to have a number of trading view concepts, right, in this particular playlist. So, how to do option trading with Nifty 50, and how to do stock option trading, and also we are planning to discuss various script using charting tool, and how to understand the screener.in, how to filter in the screener website, right, how to filter the stocks in the screener website. So such kind of discussions we are planning. Also, we are planning to have trading view indicators, how to merge trading view indicators. So there are few difficulties in merging trading view indicators, that also we are planning to discuss, and how to trade with chat gpt, and how to do long term trading, how to do swing trading. So all these things we are planning to discuss in this particular trading videos. So please subscribe, and please share, please put a like, right, on all the videos. Thank you all. So let's move on to the topic. So today's topic is the world's famous strategy, that is opening range breakout strategy with profit targets. So my focus is on Nifty 50 option trading. So So, what is the focus of this video? Is why we are going for ORB strategy. First, we'll discuss that, and then if you are a beginner, right, I'll give you a small introduction about what are the needs when you are starting with ORB, right? What are the basic requirements when you are starting with ORB? What are the things you should understand, right? And then I'll start discussing on how to identify the targets. The very important part of this. This is the uniqueness of this particular video, right? So these things I'm planning to focus. Okay, first, why I took this particular topic. First thing is that it is a world famous strategy, and is working excellent. The success percentage is 80%. If we are doing a disciplined trading, we can get a consecutive profit, right? Even though if you are getting few losses, but we'll be able to get consecutive profits. So the success percentage is around 80 to 90 percentage. So this is why I have taken as the first topic to discuss, so that you will get a confidence, right? Then the major difficulty or major challenge in this particular ORB strategy is finding the targets. So when it breakouts, so at what end it will go, right? What is the target, right? So what is the safest target? What is the risky target, right? So not all are having the guts to take the risk. So based on the risk levels, right, so that's very important. The risk management is very important in case of option trading. So what will be the targets? So if you are if you're planning to have a safe target, so what is the target? If you are planning to have a risky target, right, so what is the target? So that you should understand, that you should easily find it out, no? So that is why I will focus on this particular important one topic, important point, right? Fine. Right. Now, what is ORB? I hope most of you know about this, but still, if you are a beginner, just I'll give a quick recap on what is an ORB. Okay, so first you should understand the candles. So you know about this candles, right? So this is a bullish candle, this is a bearish candle, right? So if it is a bullish candle, then this is the open, and this is the close, and this is the low, and this is the high. These two are the wicks, right? These two are the wicks. If it's a bearish candle, so bearish candle means this will be the open, and this will be the close, and this is the high, and this is the low, Fine. This is the basics of a candle. Fine. What is an ORB, right? So if you take a candle, so if you take a candle, right? So that if you take this particular candle is the opening range, right? Let's say it's an opening range. So above the wick, right? It will be the high, and below this particular wick, right? This will be the low. So you should not draw your opening range in the close and open area. You have to draw in the high and low area. See, this is the high, this is the low, right? So you have to draw above this wick and below this wick. So this is what drawing the ORB. Fine. So where is the ORB? So how to find the opening range? So let's say today the market starts at 9:15. So just select 15-minute candle. So don't go for 5-minute candle. Don't go for why this 15 minutes candle, right? Why I selected this 15-minute candle? Because I tried with all the other time frames, like 5 minutes I tried, 3 minutes, 1 minute. So all these are not performing well, right? So for the 15-minute candle, it is performing well. That is why I selected the 15-minute candle. Okay. Okay. So when the market opens, right, you have selected the 15-minute candle, right? So when the market opens, so your starting time will be, if the market starting time is 9:15, right? So till 9:30 you have to wait. So you should not take any trade, so you have to wait. So once the first candle appears, so you have to immediately mark the high of the candle and low of the candle, as I already mentioned here, right? So you have to mark the high of the candle and the low of the candle. Fine. And you have to check for the next candle, right? So when the next candle starts, so if it break out this particular high, so you have to go for a call option, or you have to buy it, right? And if it breaks this low, right, if the next candle breaks this low, then you have to go for a put option, or you have to go for sell, right? This is what the point. Very simple. Fine. So the second very important thing is the strike price selection, because nowadays the market is too volatile. It is slightly breaking out the high, and immediately it will go down, and it breaks the low. So in such cases, no. So if there is a if you are keeping a stop loss, then you have to have a minimum loss, right? You should have a huge loss, should have a minimum loss. So for that, you should be very careful in selecting the strike price. So let's say this is a particular strike price, list of strike price I have taken for an example, right? So let's say here these are the strike prices, right? And this is for the call and this is for the put, right? Okay. So let's say the market is in 18,027, right? Fine. So if the market is in 18,027, so if you are going for a call option, right, then you have to select the strike price only in the money, right? Let's say what is that in the money, right? So if this is the strike price, and the nearer one, and which is less than this particular levels, right? So this is the 18,000 is the current market price, right? So if it is, if you are selecting a strike price 18,000, it is exactly nearer to that, right? So that is what you are in. That's why it should be less than that. The very important thing is that it should be less than that. If you are going for the next level, right, this 18,050, it will be out of the money. So you should not go, you should not select the out of the money strike price. You have to select the in the money strike price, and not to go for two in the money, like 7,900, 7,850, or 7,800. It is two in the money. So that will also makes say if the market suddenly reverse, right? So there is a possibility, if the market reverse, so at that time what happens, immediately it will hit the stop loss, right? So we need to have some time to wait, no? So that we can able to wait, and we can able to we can wait for the market, so that it will go to the target in the next candle at least, right? So such waiting time, no? So you, for such kind of waiting time, so you have to go for this in the money nearer to the strike price. Very important, in the money nearer to the strike price. This is the point I would like to mention. You should not go for the what is that, too much in the money, like 7,850 likewise. Okay. So what I told here is that if you are going for in the money near to the price, current price, right, you have to take it, and that should be in the money. Should not be out of the money. It should be in the money, right? Okay. The next is put. Let's say you are going for put because the market is going down, so you are going for a put, right? So in such cases, what you have to do is that you have to go the same concept the next level. That is if you are going for the put, right, you have to go to the, you have to select the price which is higher than this particular current price, right? 80,000 is the current price, right? So the higher price is what, 80,050. So you have to select this, right? So you have to select only in the money. So if you are going for in the money, so in the, your profit success, successful trading will be around 80 percentage, 80 to 85 percentage. You can only 50 percentage loss will be there. Let's say if you're taking in a month, right, 15 percentage loss will be there, or 85, 80 to 85 percentage the success rate will be there, right? So please keep this in mind, very important. Fine. So what the thing, strike price, it should be exactly near to that, near to the current price. If it is a call option, it should be less than that. If it is a put option, it should be greater than that. That's it. That is what the strike price selection. Okay, fine. So how to mark the ORB in chart, right? That we'll see. So there are two ways to do it. The first thing is that you will be having your own brokerage, right? Let's say I'm using UPSTOX. So you may be using Zerodha, you may be using Dun, you may be using Angel One, right? Many brokerages there. Anything you can use it. So every brokerage, they are providing trading view indicator, right? So here, if it is upstocks, then tv.upstocks.com. If it is done, tv.done.com. If it is zerodha, tv.zerodha.com, likewise, right? So use your brokerage for using the indicator, right? So two ways I told, right? The first thing is using the trading view brokerage indicator, right? The second thing is the directly you can go for trading view indicator. So both are having a difference. I'll show you that. First, we'll see the brokerage, how to use your brokerage trading view indicator. Okay. So yesterday is 14, right? So let me mark, let me remove all the drawings, right? So let me mark the high, right? This is the high, and this will be the low, right? Opening range high and opening range low. Let me remove all the things, right? Now I'll draw it. Okay. Opening range high and opening range low, right? So this is the 9:15 candle. So 9:15 to 9:30. So this candle appears here. So I have drawn what, the opening range high as well as the opening range low. Fine. Now how to find the targets, right? Okay. So here you have this particular indicators, right? So go here and just type pivot. So pivot point standard. So click this pivot point standard. Okay. So go to the settings here, the pivots, right? And here just type Fibonacci, right? Fine. Then click OK. So now you have drawn what, the blue color line is the opening range high as well as the opening range low. And what here, resistance 1 is there, resistance 2 is there, resistance 3 is there. Likewise here, support 1 is there, support 2 is there, support 3 is there, right? Okay, so these are the levels. Let's say you can call it as a targets, right? Okay, and this center part is the pivot. Is it right? So the center point is this. This is the pivot point. Okay, fine. I'll put a separate video. What is a pivot point? How it is calculated? What is the formula for it? So I'll put a separate video. The next, maybe in the next video, right? Because if I'm explaining here, it will be, the video will be too lengthy. That is why I'm going to tell only the strategy, right? Fine. So now here, what happens? The market starts, right? and the second candle also happens here. So it doesn't, the breaks the low, right? So breakout, it was not happened here. So the third candle, no. And check, see the fourth candle, the breakout happens, and it went up to around, let's say here, how much points? This point is 19453, and it reaches what, 194, so around 10 points, 10 to 20 points, I think. Yeah, it went up 10 20 points. But the point here is that, to be frank, in such cases we'll be getting a loss in this case, because here the breakout happens, it doesn't move that much, right? So it's what happens that it reversed here, right? And it went to, so what happens here is that it will hit the stop loss. Okay, so if it hits a hard stop loss, we have to accept it, right? Fine, now go here, right? Go here. And now what happens here, at 3 o'clock it breaks, right here, 3 o'clock it breaks the high, and it reaches the first target R1 and the second target R2, right? So if you are start trading here, right, you have to fix this as the target, so R2 as the target, right? So what is the level, right? 521, and it went to, so around 40 to 50 points it went, right? So we got a good what is that, profit here, right? Now go to the previous day, right? So previous day, let me remove the drawings. So 13th is the previous day, right? So this is 9:15. So I am marking the high here, and I'm marking the low here, right? So what happens? Successfully breaks it. It reaches the first target. See, it reaches the second target and it comes down. So if you want to have a safe trading or safe target, if you want to fix a safe target, just stick on to the first target. Let's say this is the ORB high and it breaks out. Immediately you have to fix this as a target, right? And this will be the second target, right? And here it breaks, right? It breaks here, right? And breaks here. And what you can do is that this is the first target and this will be the second target. So likewise, you can keep the target like this. So normally the first target will be the safe target. Okay, so now we have seen how to identify the low, how to draw the low, and how to draw the high, and then how to how to draw the low, how to draw the high, how to identify the targets. Right now, the strike price. How to select the strike price? Fine. So let's say, let me remove everything. Let me remove indicators also, right? So I'm going to take the same day, or what is that, the same example, that is yesterday's example. So high and low. So let's say I'm going to so this is actually the break point, right? So let's say 19,456, this is the uh, this is the break point. Let's say 19,451 is the low break point, right? That is the opening range low. So if it breaks, I have to buy it. So if I want to select the strike price, then I have to go for 19,500, right? So I have to go here, Nifty 19,500 P. Then I have to go for this particular and strike price. Okay, let us check here. Let us check what happens. So on this particular day, so on 14th, so what happens is that, let me draw here. So at what time it actually breaks? At 10 o'clock it breaks, right? So at 10 o'clock it breaks, So let me check this. This is actually 10 o'clock. So it breaks and it went up to what? Went up to, very good. Yes. So in such cases, right, 104. If our entry is in 105, so it went up to 115. So 10 points. So what you can do is that 10 points you can fix as the target. So you can able to achieve. Now there won't be any. It will be safe trading, right? So if you are keeping like this, you can have a 10 points. So only it went up to 10 points, right? Okay. So now the next is, if you are going for this particular point, let's say 19,519, then I have to go for the strike price 19,500. Nifty 19,500. See, now let us check here. Uh, so, sorry. So, at what time it actually breaks out? 3 o'clock, right? So, at 3 o'clock, okay. So, huge breakout, right? Let's say here, starting from here, okay. Let's say around 107, it breaks and it went up to, my god, 30 to 40 points it went. So it's a huge profit, right? So likewise, you have to select this particular strike price, right? So in the money, so I have taken both in the money, right? So let's say here, I've taken 19,500 PE, right? In such cases, right? Because it is 90,450, so I have to go above. I mean, I have to go the next high of this particular strike price, right? So 19,500 is the next high, so immediate high. So I've taken this 19,500 P. So that is for the put option. So and here this is actually for the call option, right? Okay, fine, excellent. Okay, so the second way is using the trading view indicator. So very important actually. Using the trading view indicator, uh, there is an indicator called open range breakout with take profit zones. This is an excellent indicator. I'm using it and it is working very well for me. Let me show you that, right? So go to the indicator, right? So log in with your mail ID, right? So register with your mail ID and go to this indicator, right? So let me show you that. Uh, we go to the indicator, trading indicator, right? So click this Nifty 50, the Nifty chart, and immediately you will get this particular, right, uh, screen. Okay, chart screen. Fine. Okay, so now go to this indicator and type this particular indicator name, opening range breakout with profit zones by Praslin, right? So select this indicator. So it's working excellent, right? Fine. So nothing we have to do. Everything is automatically drawn by the indicator itself. No, you don't have to do anything. But only thing is that this is a indicator which is available only in the community script. See, indicators is there, right? Technicals. This technical indicators will be available in all the what is that? Brokerage trading view. So this is the brokerage of upstocks. They are using tv.upstocks.com. So there we'll be having all the technicals, the indicators. No, this are all the technicals. The same thing is there in the trading view website also, right? Fine, that is what technicals. The community scripts, right? So I can, or you can create your own indicators, right? So many of them have created this, and you can click the stop indicators, you can click this trending indicators here, right? And if you want to write a new indicator, right, if you're good in programming, you can go to spine editor, you can start writing your own indicator here, right? Fine. Let us take this, um, right. Let us take its opening range breakout with profit zones. Okay. So now this pink line, right, in this particular indicator, this pink line represents uh, the opening range high as well as opening range low. So every day it is drawing. See, every day it is drawing. So no need to draw anything here, and there is a shadow here, right? It represents, this is the starting of the day, trading day, right? Starting of the trading day. So it is actually showing the candle here, and high and low is automatically marked here. So this is very easy, and it is very easy for us to do the fast trading. Okay, now, so it is automatically showing the profit zones, right? This is the first profit zone or target, and the second target, right? This is another first target and the second target. If it is going down, the market is going down, right? So if we check this, so let's say if you check the yesterday's one, so this is a loss. This is a loss. So I request you to put stop loss, let's say 10 percentage, or sorry, 10 points. Keep the stop loss as 10 points, right? Right. Fine. Okay. So here, let's see, this particular target is not reached here. So we have to wait, and here another breakout happens, and the target successfully achieved. Right. This is what the mm, uh, point here, right? Let's say here, the yesterday, right? It breaks this particular point. It reaches here, right? The first target as well as the second target. Fine, we can easily get out of it, right? And then it came down. It breaks the low of it, right? And the first target achieved, second target achieved. So both the trades are successful in this particular case. That is on 13th. Again we'll go back. So here it went here. It breaks, but it doesn't reaches this particular target. It went down, so stop loss hit, right? And again it breaks here, and it reaches the first target. I think no. Yeah, I think no, right? Again it went down and breaks the first breaks at the low here, and reaches the first target, and also it reaches the second target successfully, right? If you take this particular part, the 11th, right, the date is 11th, so it breaks the high here, and it reaches the first target as well as the second target. Well and good. Here what happens, the second one, it breaks here, it hits the stop loss. So it breaks here, it reaches the first target, it came down, and down it reaches the first target, successful. And again it breaks here, it reaches the first target, right? So this particular target zones is successfully working in this particular case, even though we have few loss here, right? We have few loss, but 80 percentage we were able to get the we able to reach the target, right? See, on 7th, right, it breaks the high here and reaches the first target. It went down, it reaches the first target, and also it reaches the second target, right? It's a very good trade here. The previous day also the same thing. It reaches the first target as well as the second target. See, after that it is not going above from this, right? It just stops here. It came back. So if you are if you want to have a safe target or safe trade, stick on to the first target. Slightly, if you want to take the risk, stick on to the second target, and beyond that, don't keep it. That is what the point here. And this day is actually totally the disaster, right? It breaks and is a loss because it's a sideways market. But here today, right, I mean the previous day, fourth, it breaks the low, it reaches the first as well as the second target, right? It breaks the high and reaches the first target, right? That's it. So it's a very good indicator, right? So the pink line represents the ORB high and the ORB low, and the shaded dark region of the green represents the first target, and the light green represents the second target. Likewise, at the bottom side, the dark represents the first target and the light green represents the second target. So likewise, you can easily trade. This is an excellent indicator to trade here. Fine. So that's all about it. So I request you to subscribe, right? Subscribe, comment, and share the video. So if anybody is started the trading, if anyone is the beginner of the trading, right, just share this video with them, and so that they will be also benefit, right? So thank you all.